Welcome everybody this morning, and thank you for joining us in this discussion on venture capital. I'm happy to have Peter Thurlow sitting to my right and Meifan on the screen there joining us for this conversation. My name is Mark Heil. I'll be moderating this panel. I've recently joined Pickwick Capital Partners, as Marty has pointed out. Pickwick is a FINRA registered advisor to middle market companies and alternative asset funds, providing specialized strategic and transactional services. In other words, we raise money for people or we help sell businesses, pretty much what the brokerage business is. As always, having an attorney to my right, we'll have our disclaimer here to make sure. Information is presented for educational purposes only and intended as and may not be relied upon as tax, legal, or investment or other advice. To the extent myself or one of the panelists express an opinion as part of this discussion, they are our personal opinions and not necessarily shared by our organization. So there we go. It's out of the way now. Everybody can feel comfortable. For the next hour or so, we're going to have a discussion. I invite the audience to participate. I know many of you have venture capital investments, and we'd love to have your insights. The only thing I would ask is that you be short and to the point with your questions. We need more context. That an attorney and a venture capitalist, they are not shy about asking for the additional details. So with that, we had a great economic outlook presentation this morning. But still, when you follow what's actually happening in some of the markets that we're talking about with venture capital, things are a little bit different than what he projected out there. Morgan Stanley reports that companies that remain private longer right now, and with times being uncertain, there's a lot of pressure on these companies to create a liquidity event back to the investors right now. So we're starting to feel that pressure coming. PitchBook had out a valuation report for Q3 of this year, and some of the things they noticed, they said the smaller deals, your seed level, your Series A deals, they are still going. They're still moving at this relatively the same clip as they were 2 years ago. But as you move up that food chain, you get to the larger, the growth equity, and you get to the larger deals, there you're seeing some slowdowns, specifically growth stage companies. The terms have fallen by 60% from the record highs just a couple of years ago. And the later stage deals are really living off their previous capital rounds and being in and not going out and capital raising again. So they're making their money last longer in order to cope with the current market. So these are things to keep in mind as we have this discussion this morning. And the final point, of course, is always the IPO market, right? The IPO market, there were 27 exits, raising $21.9 billion in Q3, which was an uptick from Q2, but a big downtick from 2 years ago, right? So we're sputtering here. It's not a disaster story, but it's not a great story either. We're making our way through this time. So with that being our background, we're going to have this discussion this morning on venture capital and why it's an area you should be looking at right now. Meifan, if you would do me the pleasure and introduce yourself, talk a little bit about, she is managing director with WaterPoint Lane, and they focus on ag tech, but would you give us a little more background on that?
Sure, thanks, Mark. And it's WaterPoint Lane. So I'm one of the co-managing partners. Yes, and I'm one of the managing partners for WaterPoint Lane. So I manage this with my partner, who's based out of Toronto. So we're both Canadians. So we're focused in the agri-food tech space, and Mark, to your point earlier, in terms of sort of the evolution of venture capital, especially during this time, I would agree that as we look at some of the larger companies, there's certainly more difficulty in terms of the liquidity and also the exits. But luckily, we're sort of focused in the sweet spot, if you will, in the late seed stage to sort of the Series A, in terms of the Series A types of companies that we look at. And in terms of, the types of portfolio companies we look at, they're based, agriculture, food tech, which for those of you that were sort of paying attention to COP28, that's one of the central areas that all of the global leaders have really made a commitment to in terms of focusing their, their attention on the evolution of the food system, because it does have such a large impact on a lot of the, sort of the emissions and the climate goals. I'm sorry, there's a lot of background noise. I don't know if a lot of the goals that they're looking to for up to 2030 in terms of the goals. So good to be
Fantastic.
here.
Marty, is that your computer making the background noise?
I think so.
Okay, just checking. Peter?
Meifan, we hear you fine, so I don't know what the
Okay.
background noise is, but normally when anyone that's talked on these panels, normally the day before you have a chance to speak to your colleagues. I didn't get a chance to speak to Meifan yesterday, but I'm looking forward to the discussion. And she's more of a true VC. As I mentioned, my background is as a patent IP attorney. The reason why I'm on this panel is because for the last 8 years, working with Marty and others, I get involved more in the investor space. And then I have 1,000 attorneys to bring the deal flow to. So I've been retained by family offices, venture capital, private equity groups to share deal flow. A lot of that deal flow is because of the work that I do with DARPA. And most people doing deals love to get the non-diluted capital from the government, not only to get. Greg, is that you by chance?
Oh, somebody logged in. It is turned on mute. Sorry.
So I think, so a lot of the private equity, venture capital, family offices like to look at considering investing alongside the government. And then for those of you that have gotten money or received money from the government on certain deals, the likelihood of getting contracts with the government, I haven't seen any stats on this, but normally grows. So one deal I'm working on now, there's a $300 million contract in place with the US government for the technology at play, and that's an M&A deal. So a lot of my focus is just as much as my expertise on patents and intellectual property, that's the value proposition of the firm and understanding the technology. But it's really become capital flow. Even though we're focused on VC today, these days, the work with the family offices, the work with the city, states, federal government, I'm looking for capital wherever we can. Obviously, a lot of strategic companies have capital where they invest. And obviously, internationally, we look for a lot of investment opportunities, most recently from Dubai and also from the recently Thailand for various reasons, different connections. So I have a bunch of deals. I think the ag tech space that Meifan mentioned is really fascinating. A local company called Bowery Farming received $500 million in funding. They're a vertical farming opportunity. There's another opportunity in upstate New York. A lot of people involved in. I think that's going to be the future, one of the many ag tech areas. And there's a lot of deal flow that I just wrote down based on what I'm seeing. But let me stop there and let Mark add in.
Actually, I'm going to pick up on your DARPA since you raised that here. I know we were going to start with Meifan, but we're just going to spin here a little bit and talk about DARPA for a minute. So are there specific areas that DARPA is really looking for technologies in?
Yeah, so the DARPA, for those of you that know, and Brody's here, military background, West Point. I had the pleasure of speaking to Richard, Michael, who was sitting next to me. I know many of you in the investor space. DARPA is presented at Marty's meetings at least 3 times. They have a $4.3 billion budget, but they actually only have 215 full-time employees. Their focus is on national security. So you can think quantum computing. You may have seen a recent 60 Minutes show that focused on the advances in quantum computing. That is a critical aspect of technology for our country and for the world. AI, no surprise. And all the technologies that go into weapon technology are critical between Ukraine and Russia, and unfortunately, what's going on in Israel, and hopefully not going on in China and Taiwan in years to come. So national security thing. Years ago, Congress went to DARPA and said, we actually like what you're doing, spending a lot of money, getting results. We want to double the size of your budget, which doesn't happen too often. And they actually said no, they wanted to stay small and nimble. But the compromise they reached is they formed a ARPA-E and ARPA-H program that they all have their separate multi-billion-dollar budgets, and they invest in health, and I think, Greg, you're doing energy. They invest in the energy space as well. So there is money out there, not just VCs that we try to tap into, whether DARPA ARPA-H.
What's it take to get involved? I mean, to get the DARPA interested in your project, what's the process? Because government.
It's like
nothing
anything
moves
else.
Quickly.
Yeah, but like anything else, we're all here for a certain amount of networking. And it's just kind of the woman that's chief of commercialization, Shaq Manning. She's been up here, like I said, 3 times. It's many people from this group have reached out to her and have relationships with her. Others send deal flow. I see a lot of cybersecurity deals and related deals because of the national security aspects, and there's always some kind of hacking going on. So it's just kind of networking, getting involved, and meeting the right people, just as you're all doing today.
Is it a process like a lot of government work is you have to complete pages and pages of, here's this, and it's all done. They bring in multiple projects at one time. Is that how it's done, or is it?
It's not as complicated. They have what they call around 150 program managers, and it's all publicly available on the website. But if you're doing something in the cybersecurity space, you have to get in touch with the program managers in that space. They actually, one of the things, Meifan, they changed years ago. They added global climate change and all the initiatives, carbon decarbonization and food security is a emerging challenge for the world. So there's all those new technologies that they're looking at as well. So as much as they focus on national security, there's other interests that they're doing. Some of you may have been here. If you want to check out the website, another area of interest, I know Adam, you probably remember this, on-demand pharmaceuticals. Think of it, they are generic local manufacturing systems to print any drug that's in need. So because of the reliance we have, unfortunately, on China for the materials to make our drugs, the government put $82 million into the technology to locally develop drugs that are needed in emergency. So whether it's during the pandemic or elsewhere, and they're actually going to commercialization in Mississippi, December 15th. That'll be the first facility. Then there'll be technology at the local hospitals throughout the country and hopefully throughout the world in years to come, that if a drug is in short supply, they can literally just print it like a 3D printing machine. And there's a gentleman, Dr. Jeffrey Ling, that spoke at an earlier meeting about the technology, and if anyone's interested in that, I can get it. But one of the more impressive guys I've ever worked with. Sounds
fascinating. Meifan, I'm coming out your way, especially since you brought up food security. Why don't you talk to us a little bit about the Ag Tech Fund and what you look at? What types of deals are you looking for? What segments get you most excited?
Yeah, so some of the, so there are a number of different areas we're looking into. So as I'm sure most of you know, food security is a problem. Expected we'll have around 10 billion people by 2050. And it's no secret, there's been a lot of issues in terms of the way the food is grown, also the massive inefficiencies in the food system. So about a third of the food in the US, and that's before, it's baked, cooked, and created and thrown out in the trash. In restaurants, it's actually at the manufacturing process where a lot of that food is wasted as well. And so as part of that, a lot of resources are being utilized to grow that food and to transport that food. So one of the areas that we really focus on is on the supply chain side. As I'm sure all of you know, for those of us that use Amazon quite a bit, middle mile logistics are a huge factor in terms of carbon emissions. And one of our portfolio companies that we work with is very focused on sort of eliminating those middle mile logistics. And so from beginning to end, from the production to the distribution centers and to the various retailers, what they do is sort of create these micro factories that then remove the need for the longer term transportation, which ultimately drives up the carbon emissions. And so that company is called Relocalize. It's actually a Canadian company. And they've been incredibly successful in terms of connecting with some larger strategic customers that are really reducing that middle mile logistics for their clients. Some of the other areas that we look at is on the soil regeneration side. So that again, it's no secret that there are a lot of issues with growing food properly. So throughout the world, and I'm Canadian, so I speak to a lot of the growth that happens in Canada. Most of Canada, the soil is not you're not able to readily use that for agriculture. A lot of it is rock. The big part of it called the Canadian Shield, massively covered in rock as well as ice. And so, not to mention the health of the soil as well. So the health of the soil is obviously very important in terms of growth of the products, as well as the water efficiency. So one of the other areas that we look at as well is water efficiency and companies that are helping to increase water efficiency. So as you know, as I'm sure many of you are familiar with, if you drink wine at all, vineyards use a massive amount of water in terms of production and in terms of creating their products. And so one of the portfolio companies we've been looking at, they've been doing some very interesting things from a data perspective to help reduce the inefficiencies when it comes to utilizing water in the growth of their vineyards and their crops. So those are just a couple of the examples that I have. Yeah.
That's one of the great resiliencies when we heard the economic outlook earlier today, and he says, it's amazing how much we can accomplish despite the government. I think these conversations and people addressing these problems come to the fore right here, and part of the ways we address that as a country.
Let me just follow up on what
Sure.
Meifan was saying. Just to stay on the line of thinking, line of thought that Meifan was talking about. What's interesting about the ag tech area is that I have several deals going on, one in UK with water purification systems. You may know there's 1 to 2 billion people in the world that don't have clean access to clean water. So there's new technologies going on there that are really fascinating to see. Also, based on the background in the Navy and to look at things, we don't have enough fresh water. We have plenty of salt water, but desalination technology is actively used, of course, in the Middle East. The challenge with that technology has just been the intense energy resources needed to operate those facilities. But with new technologies that we're working on, others, that's coming down as well. In Romania, we have a big ag tech program going on, a huge amount of work. At the last meeting, Marty had, at least in New York, we had it at Markham, at the accounting firm. There was one group talked about buying farmland and redeveloping it. They're doing a lot of those deals in Europe. And then we have one company in Italy where what's interesting to me is they have 300 acres of farmland that they're using, but they're actually putting, Marty just mentioned solar power. They're putting solar panels on the property and generating power. So it's going to be a dual use facility that's really exciting. And that group is Rienzi Pasta for anybody that likes pasta as much as I do. And then a group that's coming here today, it's called Zoetic Global. They're going to be new refrigerant technology. They were at COP28 and working on decarbonization and carbon credits, which is a big area. And then on top of everything, as I asked the economist, AI is being used in all these areas, especially with crop technology, just to use certain data to see what areas of land are producing more than others. So it's really just to focus on ag tech like Meifan is doing. It covers so many different areas.
And I guess
I was just gonna
go on.
Oh, I was just going to comment, Peter, on your pasta comment. So from a food upcycling perspective, because I was just kind of talking about food waste and how a lot of the ingredients and the produce is actually wasted well before it even gets to the manufacturing facility. A number of companies that we've been looking at, they kind of repurpose the grains and a lot of the ingredients that are sort of wasted and use that to create alternative ingredients for pastas. So that's something that we've seen a trend. It's quite popular, and it's often, used in conjunction with a lot of the different ingredients. Tomatoes is actually one of the top, products that's being used to sort of repurpose and to create pasta sauces, to kind of create that combination. So certainly your love of pasta, is shared by a number of folks. So I just wanted to point that out.
What do we have for lunch, Marty?
Yeah.
Get some wine with that, it's all a perfect combination. That's what we love, the cross-portfolio collaboration. You got the wines, the vineyards, and the pastas, so.
Exactly.
It all comes together.
I wanted just to take a little step back. Marty introduced you as a Moroccan venture capital firm. That's not actually accurate. So why don't you tell us where you're based? You're new to your new fund just raised, so maybe talk a little bit to that.
Yeah. Okay. Now I'm Moroccan. Okay. Interesting.
You're Canadian. I know
I'm
that.
going somewhere new. Yeah, exactly. Thank you. But I won't be saying sorry. So I am Canadian. So WaterPoint Lane is actually a Canadian fund. It's it's domiciled out of Toronto. I am usually based in New York City, but just taking a little bit of a stint in Monaco. Because we also, aside from sort of our broader focus on ag tech and food tech, we are also looking at a number of ocean tech and blue economy companies. Monaco, as I'm sure, again, all of you know, is something that's, very focused on the ocean and sort of all the different types of, sustainability issues that are facing the ocean. And so we are doing some work with some of the portfolio companies and some of the research and innovation that's coming out of here. So which is why I'm here for a little bit before I head back stateside. But our broader focus in terms of our portfolio companies generally is in North America. Most of our portfolio companies are either Canadian or US based. We've looked at a number of different areas globally as well. So we're very interested in, some of the innovation that's obviously, there's a lot of innovation happening in Israel, also in India as well. That's actually a hotbed for a lot of the ag tech innovation that's happening. India obviously has faced a growing food security issue for a long time. They're one of the most populous countries in the world and continue to have to sort of really drive up their innovation from an ag tech perspective just to feed their population. Of course, Netherlands is another area. They've been sort of on the, they're very well known for a lot of the sustainability solutions that they've put together. And so we're doing a lot of work, in terms of our research and also in terms of our strategic partnerships with various other parts of the globe as well.
Peter, a little bit earlier, you mentioned that you have a fund formations group here at the firm. And just hearing Meifan talk about her fund, talk a little bit about what's going on in terms of terms with funds and how things are progressing there.
So the fund formation area, we have 4 deals going on now where the SEC group is setting up 2 $25 million funds, one $100 million fund, and one $250 million fund. What's fun for me is I get to bring the client in, then we're working on where they're focused on. So I don't know if I can answer your question. I think a lot of the terms are pretty standard these days, whatever the fund terms are. I don't get into those areas. But one of the things I can mention as we work on the fund formation, where they're interested in investing, I can just throw out some ideas based on deals I see. For those of you that are into technology, especially life sciences, you may be familiar with CRISPR technology. That's Dr. Jennifer Doudna and gene editing technology. You may have read earlier this week in the news about that technology being used, especially for the African-American population that is hit with sickle cell disease. That technology was just approved by the FDA, and that's very exciting. Many scientists that I work with in the area think that we're still at the first inning as far as what gene editing technologies is going to be able to do in the future. So just in the last few months, we brought on several clients in the space that are receiving the funding, and that's a very exciting area. And then I think Marty mentioned, or others, the precious minerals, because of supply chain challenge, getting the materials, the minerals in the United States or in one of those allied countries is important. Anything but China, unfortunately, we want to try to stay away from that. And we're always looking at the resources. So we have a lot more deals on that side. Then I think I briefly mentioned with Greg, a lot on the energy side. We had DARPA came up last week, and we talked about energy resources for the future. There's a lot of exciting technology. I used to operate power plants and electrical substations, and the latest technology on the generation side being a nuclear technology, 4th generation nuclear technology. It doesn't have the waste issues. So those are where we're seeing maybe not the venture capital. That's more of a longer term private equity play and government play, the Gates Foundation and others. But in the biotech, the family offices, biotech has been hit really hard, not as hard as fintech and Bitcoin and so on. But we still have hope. I know Richard, who I met yesterday, had some success in biotech, but unfortunately, I haven't heard enough of stories. The developments are very exciting, but we haven't seen as many successes as we like.
I got a macro question for all the investors in the room about the space. Okay, so and you alluded to the JP Morgan study, which I have in my hand here. Okay, first of all, venture capital was a shitty place to be in 2001, 2003. It's terrible performance. One time, less than one time. Number two, we take a look at the problem. 50% of the funds between 2013 and 2019 saw valuation stuck in the fund. That's a major problem. Number three, there's a tremendous amount of difference here, which we quote in this text, about one, startups going bankrupt, bankruptcy issues. Number two, down rounds, financing for VC, and as you would earlier, longer tenor. Do you want to comment about the macro environment of the VC world where you got a lot of drag on those 3 points, please?
Yeah, I think that's what the pitch book was sort of alluding to, if you would.
Maybe expand on that a little bit.
What's that?
Maybe expand on that a little bit.
Sure. So again, you're seeing the exit markets, although exits in to other financial sponsors are still strong. So that's still happening.
That's more private equity.
That's more, I'm talking about VC. Yeah, that they're exiting out to other, there's a sort of a chain. You go from your seed into your A round, into your B round, and then your later stage deals are other firms. So that's still happening. So that's still, and that's still progressing. That's part of the reason why these early stage deals, and the emphasis was on the early stage, and the companies are still seeing a fair amount of activity. When you get to the larger deals, they're able to push off new rounds of capital raising because they have larger amounts of money raised in previous rounds. So they're able to buy out. The place that's being hit are the growth equities, right? They're the ones that need to really, they're gazelles, right? The ones that are growing quickly. They're the ones that are struggling, and you're seeing a lot of bridge financing to help cope with that right now. But you are right, there are, number of failures are going up and down rounds are certainly happening in companies, so particularly those early stage companies that can't get the bridge financing. Then their option is a down round.
So
that's definitely happening.
I think, Meifan, if you want to jump in, were you able to hear Steve's comments? I think the overall state of the VC industry is very dire, as you said. I mean, I see it on all sides with the funds that aren't performing as they want. And then I see it more so on the founder side. One of the challenges, I haven't seen the interest rate issues as much. I just don't see enough positive exits that want to make people do the investment. So I think we need more positive news. I know a couple of gentlemen here from the sports entertainment business. Some of the more exciting news that we've actually received, I'm a big basketball fan, is Mark Cuban put in $285 million to buy the Dallas Mavericks back in 2000 and recently sold it for $3.5 billion. If we had a couple of those in the biotech and the fintech or other areas, I think there'd be a lot more excitement. But it's one thing, as Steve correctly said, putting your money in where you think 5 or 7 years, that turns to 7 to 10, that turn to 10 to 15 or wherever. If you're not getting your money out and you're not getting it at a certain, what your expectation, then everything you said is right. But I think Richard was telling me this yesterday. Please jump in. Sure. I think there's everything is cyclical, and we're hoping it turns around.
Well, like Steve,
Meifan, go ahead. I'm sorry.
I was just going to say, there's certainly, as kind of Mark alluded to earlier, in the later stages of some of these private companies, when you're looking at more private equity types of firms and looking at exits that may drag out for a little bit. It's certainly not the best environment, but we do feel, especially given the impact of a lot of our portfolio companies. I'm not going to say ESG because I feel like it's a very dirty word, and I'm not sitting in the room, so, but even if I, you know, like people are they're gonna be like shutting me out. So I say impact, not in like a tree hugging, you know, type of way, but just impact. In that, you know, there is, from a global perspective, you know, no matter what our views are, that there are certain things in the world that we do need to bring, you know, we need to come to alignment to and bring some positive changes to. And in that respect, you know, as these global leaders have come together for COP28, there are some very real issues. And also just from a monetary perspective as well, when you're looking at various businesses, if you're talking about water efficiency, energy efficiency, those are issues that are impacting businesses every single day. And in that respect, we do feel that we are bringing value by investing in the types of companies that are ultimately providing solutions to very real problems. And so in that area, you know, we're not going to just investing in different things that, you know, may be a trend in the moment, but also solving very real problems that everyone is facing today. Also, another area too, where we kind of pride ourselves in the way that we're able to help the portfolio companies, and in terms of their valuations, we both, you know, both my partner and I have extensive experience from a digital transformation perspective. You know, Peter, you spoke a number of times, as you did Mark, about technology. A lot of portfolio companies and in their turnarounds, no matter what stage they are in their life cycle, much of it is driven by technology. I come from a technology background. Much of the transformation, you know, it used to be it would take 30 companies for an S&P 500 to sort of start and fail, or, you know, grow, exit, whatever you want to call it. Today, that can happen in the course of a few months, and that's all driven by digital transformation. And so with that expertise, you know, we partner with companies like Amazon, Google, Microsoft, and such in order to drive that sort of very quick digital transformation within our portfolio companies. And then on the exit side of it as well, a lot of it is based on sort of the very strategic partners that you have. You know, maybe law firms like Polsinelli, you know, that you work with, that are able to very quickly help you drive some of those transformations and exit strategies, which ultimately will give you the valuations that we're looking to return back for our investor returns. And so I think a lot of it absolutely is environment dependent. Certainly, there are always opportunities, though, in the face of any sort of, you know, downturn, so to speak. Those are often the times when truly unique companies are able to make their mark in the marketplace.
Great points. I had the pleasure, one of the nice things is I have the pleasure of meeting a lot of people. I met Brody recently, and then I actually spoke to Richard yesterday. So Richard had success with a biotech company, maybe the only one. So I asked him to say a few words.
well, like Steve knows, when interest rates were like, money was free, right? And then you go to 5%, that changes everything, right? Even the biggest public companies. So one case in point is diagnostics for medical. Right, the biggest company in that space was public, never made a profit for 15 years, and then the market cap dropped to a low $6 billion, and they were scared at headquarters. So they put out a press release and said, "We're going to turn the corner. We're going to go profitable," and they finally did. So market cap goes back to 18. But what that did, it froze everybody else in their space. So they said they're not going to make any more acquisitions. They divested of an asset. They had been acquisitive. Everybody else in the space then all of a sudden said, we're not acquiring anybody either. We can't tell the street we're going to get profitable. We're at least going to tell the street we're going to reduce our burn. So that shrunk the demand for new assets, right? So guess what? The 7th of September, a deal that in 2021 sold for $500 million, retraded to that number one company for $0 with milestone payments of 60. Right? Amazing how one company played the game and really to their benefit, right? Now, in contrast, and 3 weeks later, I sold a company for multiples higher in that same space. We had a unique asset. We had been picked by Hospital Corporation of America as an exclusive. They're the largest group in the country, right? So there were a lot of things we had going for us, but nevertheless, we had a great founder. We had great doctors, great salesmen. We kept pancreatic cancer patients alive for 4.5 years. So we threaded a needle because we had a great asset. So, you know, I guess it would be like if you're a surfer, you're never scared about the big wave, but you know it's there, right? So you
First of all, when you go 550 basis points in 18 months to kill everybody, you got to take a look at commercial real estate business and regional banks.
Yeah, that's right.
Number two, I mentioned the macro concept. I didn't mention the opportunities that she had mentioned, and you had mentioned the you can spit, kind of, put the bullet, silver bullet coming in three.
Right.
In three, there's been a tremendous amount of down rounds, a tremendous amount of things, but Morgan Stanley's quoting here, the amount of down rounds that when they actually post-money valuation declined by 50%, okay?
But look at 500 to 0. I mean, the down rounds in the investor world, I mean, this is the message to anybody in the room, and I'm an investor turned CFO, but I'm still an investor. I mean, you could get a Series D round in certain industries for the seed round or A round pricing. So I'm surprised by PitchBook's data that says invest, but I've seen this with my personal experience. People would rather invest in a Series C seed or an A than a D at an A price. Right, because they think they're saying
Right, because they think there's a bad story, there's something they don't know, right?
Exactly, don't know,
Yeah.
exactly.
There's
They're
a lot
scared
of,
it. Yeah,
there's a lot of
absolutely.
families that are actually,
Right,
very excited because the valuations have come down to, so, exactly. So as everything you've mentioned, Steve, and the article seems very good. I think there's still a lot of optimism and, you need to, pick the right company.
Sector specific.
Yeah, I mean, you look at this one company I mentioned to be here today, Zoetic Global. They have new refrigerant decarbonization technology. Been with them 5 years, 4 years, they're quiet. They go to COP28, signed a bunch of big deals with Saudi Arabia and other companies, and they're off and running. So it's you got to pick your winners and
Good deals always get done.
We had an interesting discussion in Miami about secondaries, and there's, so when 2008 happened, there's only really 5 large secondary funds,
Right.
more than $1 billion. Now there's 20 or 30 of them, right?
Yeah.
And when you're doing secondary transactions, they don't have to be reported,
yeah.
right?
I
So
met
we
with,
don't know, I mean, you're talking about down rounds, we don't know what secondaries are.
well, I met with a family office in Greenwich, an advisor, and they were talking about, buying secondary, VC funds and secondary private equity funds. And at the same time, a friend of mine is saying, help me raise new money for a new fund. I'm going, why raise money for a new fund when you can buy an existing fund? You can see the portfolio and you can buy it at a discount at 40 cents on the dollar, right? I mean, it's really hard what you guys are doing, trying to raise a new $25 million fund or a new $100 million fund when you're facing that in the marketplace. I mean,
It's like building a new house when there's tons for sale.
Tons for sale, exactly,
There's a
right.
thing called the staple, right?
Yeah.
We got about 5 minutes, guys.
All right, good.
Meifan, do want to leave you out here since you're on the screen. Just want to, any,
I mean, I think in terms of, just venture capital in general, like we're obviously very optimistic about what, sort of all the opportunities out there and also in our approach as well. We tend to be a lot more hands-on with our portfolio companies and have a very good relationship with the management teams for our various companies, despite sometimes not necessarily being the majority equity holder. And so, we kind of continue to take that growth equity approach, if you will, towards the success of our portfolio companies. And we continue to see opportunities, especially in 2024. I mean, obviously, you guys talked about interest rates. There's a lot of rumors, election year, interest rates. Often there's a lot of, we expect to see a lot of changes kind of in that area throughout 2024. And so always a good opportunity to, to kind of find some new investor interest there.
Talk a little bit about your investors and what got them excited about your fund.
Yeah, so we work with a number of different investors, ranging from high net worth to family offices, as well as institutional investors as well. I think, in terms of just kind of going back to what we've been discussing around COP28, there is a lot of opportunity in this area. The food security issue continues to be a global problem, and it's something that's very much at the forefront because it's very much ingrained in many of the other issues that we're facing globally as well. But most of all, I think from a returns perspective, just kind of with our returns over the last couple of years at 46% IRR, we've been able to really show that, a lot of the areas that, that are very collinear, meaning that the better the companies do, the greater the impact that they have. It's not really separate in terms of the returns versus the impacts. And so we very much believe in what we're investing in and sort of the areas that that we care about. And I think in that respect, many of our investors who are interested in sort of our vision and what we, what we kind of see going forward, as well as sharing, the returns profile as well. There's a lot of interest in kind of working with us in that
Sure.
respect.
I want you, before this ends, and Marty's getting out the cane, so I'll ask you for yours and Peter's final thoughts in just a second. But before we dive there, I want you to talk about your strategic relationship with the New York Development Council and why you got involved with them.
Yeah, absolutely. So, again, like we very much care about impact in the communities that we work as well as live and invest in. And so the New York Economic Development Council supports a lot of small businesses in New York City itself. And so, in that respect, so we're part of the Venture Alliance, and venture capital firms as well as private equity firms have a real opportunity to multiply their impact on the community because of the fact that they are investing in multiple portfolio companies. They're working with a number of different leaders, a lot of different strategic partners. And so they're able to really amplify their impact on the community in a very positive way. And so we decided that we wanted to be a part of that change, especially within New York, because, most of us, I think, are New Yorkers here, and we really care about the way that New York sort of grows and develops. And a big part of that comes down to the economic impact. And so we decided to be a part of it so that we could really kind of help amplify that effort.
Sounds great. Remember to type your contact info into the chat if you haven't done so already, for the people online. And Peter, if you would, maybe give us a final summary here. And
I think I'll end by saying if anyone, investors on the Zoom or here want to talk about deal flow again, I think I just see a lot of it. To give you some more examples, people that clean their homes a lot, there's a cleaning product called the Pink Stuff. They make around $100 million a year. Working with them on various M&A technologies. For those of us with lower back problems, as we get older, a company, Discgenics, that's regenerating disc technology, regenerating the disc. So that's a really exciting technology. Paterna Bio is a company that does a fertility company that's taken stem cells and it's going into fertile sperm cells. And then the last one, we do a lot of work in the neuroscience area. And you're probably familiar with the exciting things that Elon Musk is doing, among many things, but the Neuralink and neuroscience, where the brain is going, is a fascinating area as well. So a lot of deal flow, happy to share some ideas. And then, as I mentioned, I'll end on a good note. I did meet Joe Rienzi from the Rienzi Pasta family. They're the family with 300 acres of property in Italy that invited me to tour the facility, so that's another one if I'm on. I think I'll probably get a lot of takers of people interested in doing pasta deals. So Meifan, really enjoyed the panel and thank you very much, Mark.
great job. Thank you.
Thanks so much for having me. Take care.